Welcome to the Investing Iguana, where we crack open the secrets behind why billionaires everywhere are rushing to get a Singapore address, and why smart investors across the region should be paying close attention. Singapore may look like a tiny island, but it's turning into a giant magnet for global wealth. Today, I'll share why the ultra-wealthy are migrating here, tell you what that means for us as investors, and spell out the practical moves you can make to benefit from this growing trend. Adapted from my latest in-depth Substack deep dive, this is a journey through Singapore's transformation that you won't want to miss. Before we dive in, a quick credential check. This channel was recently ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for total reads and 58,000 likes, and I've produced over 1,000 finance videos for regional and global audiences. Let's map out the video. First, we'll see why billionaires are packing their bags for Singapore. Next, we'll go beyond the tax story to reveal Singapore's strategic playbook for wealth. Then, we'll explore the city-state's balancing act in the global geopolitical chess game, break down the economic impacts, and zoom in on investment implications, including playbooks for local REITs, banks, and infrastructure. I'll wrap with my personal take and some real lessons you can use, plus a challenge for Singapore-focused investors. Sound good? Let's dig in. Imagine this. You're sitting in a boardroom in Silicon Valley or Shanghai. Trade wars are popping up. Currencies are on a roller coaster, and politics feels more unpredictable than ever. Where do you park your billions to keep them safe for your kids and grandkids? The answer for more and more of the world's richest people is Singapore. Here's a stat for you. Singapore now hosts 58 billionaires with a combined net worth of 108 billion. That puts us 8th globally for billionaire populations. 3 years ago, that number was only 41. And in just 1 year, their collective wealth shot up 14.5% to use 155.5 billion. It's not just numbers. It's a shift in how global investors think about safety, opportunity, and risk. Ray Dalio, founder of Bridgewater Associates, moved his family office here not just for tax savings. He wanted stability and long-term safety because Singapore's government and crisis management have earned global respect. The game isn't just about earning more, it's about keeping what you've built through any storm. For all full charts, checklists, and the written playbook, grab this post on Substack, link in description. Okay, so yes, Singapore has zero capital gains tax. That's a huge sweetener, but the real attraction is deeper. Singapore built a sophisticated incentive structure for family offices. The tax perks are part of a bigger ecosystem focused on compliance, growth, and meaningful economic impact. Under MAS 2025 guidelines, family office incentives come with local business spending requirements. That means billionaires aren't just saving tax, they're building real businesses here, hiring talent, and supporting innovation. Think about it. By 2024, Singapore reached 6.1 trillion in assets under management. That's a 4.7 trillion, growing 12.2% year over year. The number of single-family offices shot up from 400 to 1,650 in just 4 years. Each new billionaire or family office creates a cycle. More money, more jobs, and an ever-stronger ecosystem for everyone. Here's a mental picture. Imagine a bustling modern office with teams of lawyers, bankers, and advisors all working together to manage hundreds of millions. These are not paper companies. They're engines for economic activity and opportunity in Singapore. Pause and ask yourself, what signals do these billionaires see that regular investors might miss? Every billionaire is watching politics, and Singapore's way of navigating global tensions is legendary. Our Deputy PM Gan Kim Yong said it best. Neutrality is not possible. Instead, Singapore chooses principled positions without picking sides. For investors, this means Singapore stays securely connected to both the United States and China. On one hand, we have strong security and financial ties with the US, meaning access to American markets and a stable regulatory landscape. On the other, we're China's major trading partner, welcoming Asian opportunities without political drama. This balance is why tech titans like Sergey Brin, Google co-founder, and James Dyson, yes, the vacuum guy, moved their wealth and businesses here. It's not just tax planning, it's betting on Singapore's ability to keep relationships open and stable, even when the world gets rocky. Think about Singapore's status as ASEAN's financial hub. For global investors, having access to the fastest growing economies in the world, all anchored in a stable, trusted location, makes Singapore irresistible. Recap. If you had billions to protect, would you rather invest where the ground could shake overnight or where stability is the brand? Mid-video plug. Want every table, chart, and the written checklist? Snag this post on Substack. Link is in the description. Let's get concrete. All these billionaires aren't just building portfolios, they're reshaping Singapore's economy. The wealth management sector saw over 8% growth in assets under management last year, with a 5-year KGR of nearly 10%. That's not just growth, it's transformation. But what does that mean for ordinary Singaporeans? When a family office sets up here, it typically employs 10 to 50 highly skilled professionals. Luxury properties get snapped up, banks and legal firms expand their wealth management teams, and local startups secure more investment. It's a multiplier effect. One billionaire brings dozens of jobs, more business for service providers, and new money swirling in the local economy. Family offices are now major backers of Singapore startups, helping create a vibrant VC ecosystem that powers innovation. It's changing the job market, boosting property values, and accelerating new business formation. Rhetorical question. If you're an investor, would you rather fish where the pond's getting smaller or where new streams are feeding the ecosystem every day? Now let's turn the story into a strategy. The easiest direct play is Singapore's real estate investment trusts, REITs. As office demand, luxury retail, and high-end residential needs rise, top REITs get a boost. CapitaLand, Mapletree, Keppel. These names are seeing strong interest from both local and foreign investors. Singapore's major banks, DBS, UOB, and OCBC, are also in play. DBS, for example, expects high single-digit loan growth in 2025. OCBC's wealth management fees just jumped 25% year on year. The shift is not one-off. More wealth means more fee income, deeper client relationships, and a growing focus on high-margin private banking. Infrastructure matters too. Family offices want best-in-class tech, connectivity, and urban planning. Singapore's government continues heavy investment in infrastructure supporting finance and innovation. Watch for property plays in prime districts, tech infrastructure providers, and firms focusing on urban solutions. Venture capital is buzzing as family offices place direct bets on local startups. Quick visual guide. Imagine a table showing the top REITs, banks, and infrastructure players gaining from this migration. For the full breakdown, tap the Substack post in the link below. Rhetorical transition. If billionaires are positioning themselves for the next decade in Singapore, what can you do today to follow smart money? Singapore isn't just adding more offices, it's raising the quality bar. The 2025 family office updates signal a move towards quality over quantity. That means faster application processes, down from 12 to just 3 months, and tighter risk controls, making Singapore even more attractive for serious players. Compliance is rising. The days of letterbox companies are fading as risk-based due diligence and transparent reporting take center stage. This keeps Singapore competitive, solvent, and trusted by global investors. Imagine a regulatory dashboard. Less paper, more substance, and a pipeline committed to sustainable, high-caliber growth. Engagement question. As Singapore steps up quality, are you prepared to shift your investing strategy towards substance rather than hype? If you're a Singapore-focused investor, now's your moment. This isn't just a passing fad, it's an economic transformation opening opportunities across real estate, finance, infrastructure, and startups. Here are the actionable investment themes. Singapore, REITs with premium commercial exposure. Think prime office space where wealth managers and family offices want to be. Banks with expanding private banking and wealth management arms. DBS, UOB, OCBC are leading the charge. Infrastructure investments tied to ongoing government and private sector upgrades. Tech, connectivity, urban solutions. Startups and VC deals as family offices allocate more capital locally. Watch for secondary investment streams that benefit innovation. Currency tailwinds. Steady foreign inflows mean structural support for the Singapore dollar, boosting SGD-denominated investments. Here's the crux. What billionaires see in Singapore is more than just tax or safety. It's ecosystem thinking. It's about anchoring wealth in a place designed for endurance and growth. As someone deeply invested in regional trends and boots-on-the-ground dynamics, my advice is simple. Don't wait for headlines. Learn what makes Singapore attractive, track the policy shifts, and position your portfolio to benefit from the next wave. For Singaporeans and regional investors, the real challenge isn't whether to invest, but how to move early and smart, spotting the structural growth areas most likely to survive and thrive. The next decade will be defined by those who understand the game and adapt quickly. Let's recap. Singapore's wealth migration isn't just changing the skyline, it's creating lasting opportunities and shifting investing norms. For us, following the smart money means focusing on premium real estate, robust banks, key infrastructure, and the Singapore dollar. If you found this video helpful, please give it a like, share with fellow investors, and subscribe to the Investing Iguana for more insights. For full charts, tables, and detailed playbooks, grab the original post on Substack. The link is below. Want to keep learning? Watch my follow-up video on how Singapore's family office boom is changing local real estate with Playbook. It's a perfect next step for anyone eyeing the real investing opportunities. See you next time. Keep investing smart, and remember, the world's billionaires aren't just following trends. They're finding new safe havens. Singapore just might be yours.